This company is going to make you a lot of money in the market. It's selling at a 10 PE, forward PE, even lower. Man, it just came out with its earnings and it killed it. I'm talking about JD.com. The price makes no sense. I've been putting hand over fist into this company, calls, shares, everything. Let's talk about the earnings that just came out, which they honestly killed. But let's talk about it in this video. But before we do, like and subscribe to this channel. JD.com came out with its earnings and look, they beat. The revenue grew 13% year over year, a beat by $1.83 billion. So they killed it. Their net gap EBITDA increased 29%. They have $33 billion in short-term investments and cash. Look what the management is saying about the company. We head into 2025 with more optimism as consumption sentiment steadily picks up and we continue to unlock high-quality growth potentials with our strong execution and strategic priorities. Man, JD.com just killed their earnings, man. And if you actually look at their share price, it literally does not make sense why it's trading so cheap. It reminds me almost as like they're gonna go bankrupt or like no one wants to own this company. They're also doing share buybacks. They bought back 8% of the company and they're gonna continue to do buybacks this year, $5 billion out into 2027. I think they're gonna use up all that just this year because the stock is just selling so cheap. Can anyone name a company that's selling for 11 PE, forward PE around 8 or 9? If you minus the cash, it's around like 7 or like 6. Man, this is like a top tier company in China. This is not like some little company that just been like profitable. Like this company started back in 2014. So we're still a long ways off its highs of $106. I think this company can get to at least $60 by the end of this year, especially as the economy picks up in China. Like they're projecting at least like 5% growth in the GDP of China. The government is doing everything in their power to grow the economy, especially as Trump hits the economy with tariffs. They're doing more stimulus than they ever have been in the last like 5 years. They're giving China new programs, new buy-in programs. So a lot of people are trading in their products for new electronics, home appliances. So this is all benefiting JD.com as they're starting to get into lower tier cities and they're maintaining their product quality while doing this. Guys, this is an amazing opportunity. I don't understand why it's selling for so cheap. So let's break down the solid growth JD.com has been achieving. Since 2019, 50% net revenue CAGR. So that's amazing. Year over year, 13.4% net revenue breakdown, 14% net product revenues and service revenue, 10%. This is quarter over quarter, 13% CAGR since 2019, 28% for the service revenue. So look what they've been doing. Product revenue up, electronics 15.8%, general merchandise 11% year over year growth. So guys, this company is growing solid. Like there's no question about like this is a growth company. Even if this company does 7%, this is still amazing. So it doesn't make sense how the stock is selling so cheap. Even though operating income is kind of down 3.3% from the 5.2% in the last quarter, but they're making extreme improvements in that sector. But non-GAAP net profit up to 4.1%. So they're still making progress. They're generating around $6 billion in free cash flow. They're actually generating a lot of free cash and they're using that to buy back shares. They're using that to improve the business. They're going to get into on-demand delivery. JD.com is using the cash flow like really good because they're talking about really giving back to their shareholders by upping the dividend, by buying back shares. So that's what they're promising, and they're promising better margins. Like you can't ask for anything else. Everything in this earnings call just tells you why the business is moving forward and going really strong. That's why you can kind of ignore the market like reaction to the earnings and like what the market's doing, why it's selling so cheap, because it doesn't matter. The business is moving very strongly. So total revenues were up 7% year on year, outpacing the growth of both total retail sales and online physical growth as reported. As our market share expanded, this is really important. We remain committed to our operating results service of lowering costs, increasing efficiency, investing in user experience with continued financial discipline. So they're actually increasing market share no matter what everyone tells you about, oh, it's a dying business, blah, 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 blah. Heading into 2025 with the government stimulus policies adding to the tailwind, we are well positioned to benefit from the rebound in consumption. Our general merchandise continued its strong performance in Q4 with revenue growth accelerating 11% year on year. We've invested in building the operating expertise and the massive market opportunities in both supermarket and fashion categories. So those two sections are actually increasing a lot and they're becoming very efficient and they see a lot of growth opportunity in those fields because they're growing double digits. So we can kind of hold on that, damn, this business is expanding, they're still growing. We don't have to worry about it being like a dying business. We provide some updates on these key areas. First, on our user growth and engagement. Q4 last year marked the 5th consecutive quarter of quarterly active customers seeing double-digit year-on-year growth, with growth accelerating further in this quarter. So guys, the user shift is still going up. And again, I like JD.com so much because of what they're doing with their shareholder returns. And that's why I have faith in this business long term, or at least for the next 4 to 5 years. On the back of our strong financial performance, we also deliver considerable returns to shareholders through both buybacks and our annual dividend. Our total shareholder return rate for the year reached close to 10%. Our strong results reflect our commitment to drive lower costs, high efficiency, and best-in-class user experience. So they're committed to all those sections, plus they are really heavily into just like giving back to their shareholders. So Sandy is really looking out for us as shareholders. I love what the management is doing with the money. 10% yield on our money. That's amazing. And they're going to continue that out to 2025, 2026, 2027. So I'm super excited for what they can do on the back of a growing economy in the Chinese market. I'm not joking when I'm saying this company has around 10 to 12% free cash flow yield with $32 billion in short-term investments in cash, promising to buy back around 8% of its shares going forward. I think it's going to be more. Man, there's a lot going for JD.com right now, but the market just hates it because remember, it is in China and there's still risk of all the tariffs and what Trump's doing, and maybe they ban China. I don't know what's going to happen, but that risk is there. But man, JD is just selling way too cheap in the market. Guys, I have so much money in JD.com. It's crazy. I'm just going to hold for now because I think this is going to 70, 80, at least $80 a share, maybe in the next 2-3 years. We'll see what happens. But guys, like this video and subscribe to my channel. Peace.